If you've been sitting there wondering if you have equity available in your own home or your investment property, then this is the video for you. In today's video, we're going to talk about what equity is, how you can use it, and who you should go and talk to see if you've got any. Now, we're also at the end of the video going to share some examples of how Simon's used it and other clients of ours have used it as well. So get your notepad out and let's get going. Before we get stuck into today's video, I just wanted to say that Simon and I are buyer's agents, but we are not mortgage brokers, we're not accountants, we're not solicitors, and we're not financial advisors. So this video is certainly not advice for you, for your position. Go talk to those guys if you want to know more. But let's kick it off by saying, what actually is equity?
Look, I actually love equity, and in some cases it can be, just as good as cash. And essentially it's the growth of an asset over what you paid. So an example would be, let's say you bought a property for $400,000, right? If that property is now worth $500,000, then you've essentially made $100,000 in equity. It's as simple as that.
Yeah, and unfortunately, the bank's not going to go, well, you've made 100K,
here you go,
$100,000. But that's what I love about the Australian banking system, because they're going to be conservative and they're going to lend you a percentage of that based on their risk and your risk profile. So what people generally do is they either go to the bank or they go to their mortgage broker and they say, look, I've got a house worth 400K or that I bought for 400. At the time of buying it, they might have put down a $100,000 deposit, so they actually only owe 300 grand on it.
Yeah.
Now it's worth 500K. And the bank or the mortgage broker will organise a valuation and go, yep, it is worth 500K. And then they'll say, well, based on your position, you've got 300K debt, the property's worth 500. How about we lend you $100,000 back? And then people take that $100,000 and unfortunately in Australia, a lot of them blow it on cars, boats and jet skis, but you're not in that category, which we know. So what people go and do is they renovate their homes to add further value, or they take that money out and then they put that money down as their deposit on their next investment, which is a really, really sensible way to keep moving forward.
Something that a lot of people don't take into account is whether or not they can service the extra debt as well. So that's really important. That's why we say go talk to your bank manager, go talk to your mortgage broker and see how you can really use it to your advantage, because if you can, it can dramatically speed up your journey through the accumulation phase of purchasing properties, or paying down some debt, maybe doing some renovations or whatever you want to do.
One of the things, like where Simon talked about, it can speed things up. So let's say that you're earning $100,000 a year combined in your household, and you can save $20,000 a year after all of the costs in your life. That $20,000 is 20 grand in year one, 40 grand in year two, 60 grand in year three. It might actually take you 3 years from today to save the money to go and buy your next investment property with a cash deposit, where you might have bought that house for 400, you owe 300, and now it's worth 500K. You might be in a strong financial position, you just don't have the savings to go and put a deposit down in cash. And so that equity can help you move into the market faster. Now, at certain times in the market cycle as an investor, it's a good time to go in and buy it, particularly when markets have been flat for a long time and they have a long-term history of performance. But it can also be a dangerous thing to go out and borrow equity when the market's already gone absolutely nuts in value and you're buying at the top. So just because you can borrow it doesn't mean you should is a huge rule that I think, I always err on that side of caution.
I love that. And you're not somebody that does this either. I
haven't used equity.
Yeah, I don't know if you've ever used equity to do anything, which, you're a super risk averse guy, and that's a good thing. But not everybody's in a position where they can save, big deposits every single time they want to buy a property. So, for single income families and things like that, it could be an easier way for them to get forward. But 100%, you've got to make sure that you're doing it at the right time.
So an example recently is, Simon, you bought this home that we're sitting in today, and it was right in the middle of the coronavirus when everyone was freaking out and thinking that property was going to go to zero. Effectively, You bought it at a great price. It's risen in value really quickly. And so what was your experience there?
Yeah, no, it was a great experience actually, and I was really fortunate. So we bought this property, or got it under contract in June of 2020 for about $560,000 on the Sunshine Coast, about 2Ks from the beach. Really great location. Since June, Sunshine Coast property market has boomed. Now, our intention was always to do a renovation, but we thought we were going to have to save up cash to do it. Now, lo and behold, about 6-7 months later, we were seeing properties in the area selling for about $100,000 more than what we bought this for, and we're like, wow, that's amazing. So we refinanced the whole home loan, which is, probably the first way to figure out whether or not you can actually get some equity. So I went to my mortgage broker and said, look, I want to refinance, pull my home loans together and see if there's any equity in my home so that we can get cracking on the renovation sooner rather than later. Went through that entire process. The valuation came back from the bank, looked really good. Based on the debt that we owed on the property plus the equity increase, the banks were more than happy to lend us a decent amount of cash, around $60,000, and we, then added some value to the house. Obviously you're going into more debt, so you got to, err on the side of caution from doing this. It's not like they're giving you free money, it's still debt that you owe. But it enabled me to create the home that I envisioned when I initially purchased this. I completely replaced the kitchen, replaced the light fittings, replaced the flooring, painted, opened up the floor plan. I completely redid the backyard and the outdoor entertaining area.
It looks sick, man. I'm so stoked with what you've done. And every dollar you've put in has made you at least $2 back out as well.
That was the best part about this as well, because I am adding value to an asset, and because I was doing it in a rising market. Basically every dollar that I've spent, I've gotten $2 out of it, which is absolutely so beneficial.
Yeah, so we work with all sorts of different clients. In fact, we've bought over $250 million worth of property now in Sydney and Brisbane in the last 5 years alone. And what I've learned from that is that, half of the people we work with use cash, and I completely get that. Like, there's some people that are just really good at saving, or that have been saving for a long time, or that get an inheritance, or that just have money sitting around that they are not sure what to do with, and that's cool. But we also work with heaps of people that either own their own home or 1 or 2 investment properties that have equity, or a property that's worth more today, because people living in Sydney and Melbourne or Hobart or in many parts of the regional markets in Australia's properties have gone up significantly in the last 10 years. And then some of those people are taking a small amount of that increase to look at reinvesting it. So regardless of where you sit, equity can be a great vehicle to move into markets sooner. But as always, just because you can doesn't mean you should. We recommend your first step would be to go and talk to your broker or your bank manager. One good tip is properties generally, if you were to jump on the sold section of realestate.com to try and get a sense of what your home or your investment's worth before you do this, generally sell for much better or much higher amounts than what the bank will value them for. So just be careful if you've only got a property that you, for example, owe $350K on that's worth $400, and you're trying to go get equity. Just be aware that the valuation's probably going to come in short, and there might not be a huge amount there. So you might have to wait a bit longer or do something to increase the value of the home. But, these are our little thoughts. I'm definitely going to use equity on my next one. Like, I'm been saving my ass off for a long time, and I've also been paying a lot of debt off one of my properties, and I think moving forward into the market later this year, I'll finally use some equity and just give myself a bit of a breather.
Yeah, exactly. And, that's just a strategic decision for yourself as well. You're like, interest rates are super low. I've paid lots of cash debt off. So you've used your own savings to pay that off. So it's kind of just, that was a very strategic decision. So, that's what it's all about. And you've obviously had discussions with your mortgage broker and accountant, and they've said, look, that's actually a good call
for me and my situation.
Yeah.
So we wish you guys all the best. I hope you've learned a little bit or enough about equity to at least know what your next step is. If you haven't already done so, subscribe to this YouTube channel below, give us a thumbs up, share this with someone else who's asking you this sort of question. We put 2 to 3 videos like this up on YouTube every week, and we've been doing that for 5.5 years. Also got the Pumped on Property Show podcast over there on Spotify and Apple. You can follow us on Instagram to see more tactical tips and tricks plus what's going on in our world. Facebook as well. But we wish you all the best. Please stay safe. Just because things are good now doesn't mean they're going to be good forever. And just because things were really bad last year doesn't mean they're not going to be better in the future too. So hope you've enjoyed this. I don't know how to finish it up. See you guys.
See ya.
Oh, sweaty. So sweaty.